Hi, welcome back to Joe Blogs. In today's episode, I want to talk about the Russian economy and the impact that the sanctions, particularly on Russian gas, are having on the Russian economy. Prior to the invasion of Ukraine, Russia's biggest customer for natural gas sales was the European Union. And in fact, Russia had built infrastructure to deliver natural gas directly to all of the places that the European Union wanted it. So this was a symbiotic relationship. Russia was happy because it was selling around $130 billion worth of gas every single year. And the European Union was also happy because gas represented a far cleaner source of electricity production than the historic use of coal. It was about 2 times more efficient. So therefore, lots of countries in Europe made the wholesale move to scrap all of their old coal power stations and move to using gas. And in the 20 years preceding Russia's invasion of Ukraine, this represented a win-win situation for both sides. However, over the course of the last 18 months, it's represented a big loss from Russia's point of view, and gas sales have fallen off a cliff. And one of the problems that Russia is facing is that unlike oil, it's very difficult to be able to monetize that gas, because in order to sell gas to countries like India and China, Russia would need to convert it into liquefied natural gas. And whilst Russia does have some liquefied natural gas facilities, it doesn't have anywhere near the capability of being able to convert all of the lost gas sales. So this represents a real problem for Russia. And one of the biggest issues that Russia is now facing is that the world is changing its consumption patterns, and the European Union is looking at doing things in a completely different way. So this isn't simply a case of Russia having to bide their time, waiting for the market to come back, and then being able to rebuild that $130 billion worth of revenue that it was previously earning. But rather what we're starting to see is that countries are now investing into other forms of producing electricity, and Russia could very well find itself in a situation where nobody actually wants natural gas, that it becomes a fuel of the past. So in today's video, I'll have a look at a detailed breakdown of what's been going on with the production of electricity in Europe, how much is actually being produced using natural gas today versus the situation before Russia invaded Ukraine. We'll then have a look at other forms of natural gas usage, because households in many countries in Europe use it for heating and cooking, and it's also used in a lot of industrial processes. We'll then have a look at how the imports of natural gas have changed for the European Union over the course of the last 18 months, and then what's going on with regards to liquefied natural gas, because there's been a huge increase in the use of LNG by Europe. And once again, that represents a problem for Russia because it simply doesn't have the facilities to be able to increase significantly its output of LNG. We'll then have a look at what's happening with storage levels of natural gas for Europe, because European countries need to have plenty in supply to get them through the winter period. We'll then have a look at what's been happening to Russia's income from natural gas sales. And then finally today I'll wrap up with my summary as to what I think is likely to happen over the course of the next 3 to 6 months with regards to Europe's use of natural gas and Russia's economy. But before we get started on all of that, once again, I'd like to say thank you so much to everybody that's bought me a coffee or sent me a YouTube super thanks. Really, really appreciate that. And if you'd like to see more face-to-face videos, as well as some that I'm not posting on YouTube, and avoid the adverts, then please check out my Patreon channel. However, if you don't like Patreon and you'd still like to support the channel, please have a look below where you'll find links to buymeacoffee.com, as well as YouTube super thanks and membership scheme. This chart shows the breakdown of electricity generated by the European Union over the last 5 years by power source. And in terms of the colour scheme, the black section at the bottom represents power generated using coal, the grey section is natural gas, the purple section is nuclear, the dark green section is hydro, the light green section is wind, and the yellow section at the top is solar. Now, as you can see from the shape of this chart, the production of electricity is seasonal and rises to peak usage in December and January each year, which represents the winter period in Europe. And if you look at the trend of this chart, you can see that over the last 3 years, there is a clear upward trend in the total amount of electricity being generated and used. And that's not really surprising, as power usage is increasing as we move more towards a digital age. And also there's a trend in terms of vehicles being powered by electricity rather than gasoline and diesel. But the thing that I want to dig down into in this video is what's going on with the use of gas and renewable energy sources. And if we change the scale of this chart to show what's been happening over the last 12 months, it shows a very interesting trend. In October 2022, electricity generated using natural gas represented 23% of the total power generated. And coal, which is the dirtiest form of electricity in terms of the amount of carbon emissions that it produces, represented 8% of total generation. So this time last year, classic fossil fuels represented 31% of all the electricity being produced by the European Union. Now, over the course of the last 12 months, there has been a conscious effort to reduce the amount of fossil fuels used to produce electricity. And today, electricity produced using natural gas represents 18% of total power generation in the European Union, and coal represents 6%. So in total, these two fossil fuels now represent only 24%. Now, before we go on any further today, I want to talk to you about today's sponsor, Atlas VPN, and to tell you about their amazing 3-year deal, whereby you can get full coverage for just $1.70 per month, including an extra 6 months free and a no-risk 30-day money-back guarantee. If you use the internet without any form of protection, you leave yourself exposed to tracking, hacking, and advertising. Using Atlas VPN protects you from all of these. Atlas VPN provides you with comprehensive security and is used by more than 6 million people worldwide. So it's fantastic news that it will protect you from hacking and tracking and data breaches. But what's also great news is that it can save you money and open up a whole new world of entertainment, because it allows you to change your location, which gives you the opportunity to get better deals and to access content that may not be available in your region. Atlas VPN is available to use on unlimited devices for one subscription, and Atlas VPN are currently offering an amazing 3-year deal where you can get full coverage for only $1.70 per month, including an extra 6-month free and a 30-day no-risk money-back guarantee. So to purchase this exclusive Joe Blogs offer, please click in the description below. And this chart shows the year-on-year change in the sources of electricity production for the European Union for the month of August. And what this shows is that in August, there was a 39% fall in the level of electricity produced using coal and a 22% fall in electricity produced using natural gas. And these two huge reductions were as a result of an increase predominantly in renewable energy. Wind generation increased year on year by 29% in August, hydroelectricity increased by 23%, solar increased by 14%, nuclear was up by 3%, and other sources, including the use of biomass, were up by 3%. And if you look on the right-hand side of this chart, you can see that total power generation was actually down by 3%. And that's another initiative that the European Union have been following. They've been asking industry and consumers to try to reduce the amount of electricity that they're using. Industry has been asked to introduce initiatives such as using power at off-peak periods, such as during the evenings or at night, when there's less demand and therefore surplus supply from renewables such as wind and hydro. And consumers have been asked to turn their thermostats down by 1 degree to reduce overall consumption. And this chart shows the total amount of electricity generated by the different power sources in August. The dark blue bars on this chart represent the production of electricity in 2022, and the green bars represent 2023. And what this shows is that the single biggest source of electricity generation in August was nuclear power, representing 25%, and that's an increase from 23% in August 2022. The second biggest source was natural gas, representing 16%. However, that's a fall from 20% this time last year, and there is a clear trend to a reduction in the use of natural gas. The joint third largest power sources were both renewable, being wind and hydro, which both represent 14% of total electricity produced, with the percentage of hydro increasing from 11% and wind from 10% in 2022. The fifth largest source of power generation in August was solar at 13%, which was an increase from 11% in 2022. The sixth largest source of power was coal, which represented 12%, which was a huge reduction from 19% in 2022, and other power sources represented 6% of all electricity generated. And in terms of the impact on CO2 emissions from the European Union, these two charts show the level of CO2 emissions from electricity production using both coal and gas, dating back to 2016. And the lines on this chart are in varying shades of red, with the very lightest being 2016 and the very darkest being 2023. And if we start off by looking at the chart on the left, which covers CO2 emissions from coal, it shows a really interesting trend. The first 5 years of CO2 emissions between 2016 and 2020 followed the course that you would expect, because over the last 10 years there has been a pushback towards using coal as a result of the fact that it produces such large amounts of carbon dioxide, which has negative implications for the environment. And you can see from this chart that in every one of those 5 years there was a general reduction in the amount of CO2 emissions as the amount of coal was reduced. However, that situation changed in 2021. As we came out of the COVID-19 lockdowns, there was a huge increase in activity and there was a massive surge in demand for electricity. And as a result, a number of countries had to go back to using coal as a way of satisfying the huge increase in demand for electricity. And then in 2022, we also saw an increase in the amount of coal being used as a direct result of Russia's invasion of Ukraine. The sanctions that were imposed against Russia meant that many countries wanted to reduce the amount of natural gas that they were using, and a lot of countries had to start using their old coal-fired power stations. And in some situations, power stations that were actually earmarked for closure were reopened. However, as you can see from the line at the bottom of this chart, that situation has now reversed itself in 2023, and the amount of CO2 emissions from the use of coal for electricity is now at its lowest point that it's been for the last 8 years. If we now look at the chart showing the amount of CO2 emissions from the use of gas to produce electricity, it shows a very different picture. The line at the very bottom of this chart, which indicates the year with the lowest level of emissions, actually represents 2016. And the lines on this chart are almost the exact reverse of what we see for coal. And the reason for that is that a lot of countries in Europe have made an active decision to move towards the production of electricity using gas, as it's seen as being far cleaner than coal. And if you look at the two scales on this graph, you can see that they're very different. The scale for carbon dioxide emissions for coal starts at 0 at the bottom and rises to 2 million tonnes per day. However, the scale for the gas chart starts at 0 but rises to a maximum of 800,000 tonnes per day. And you can see that the majority of the lines on the coal chart are sitting between 1 and 1.2 million tonnes per day. However, the majority on the gas chart are sitting somewhere between 0.4 and 0.5. So generally speaking, the amount of carbon dioxide being produced using gas is around half of what it is using coal. So generally speaking, therefore, you can produce twice the amount of electricity using gas as you can using coal to produce the same amount of carbon dioxide emissions. But if we now focus in at the very darkest line on this chart, which represents the usage in 2023, you can see that apart from 2016 and 2017, it's at the lowest level that the European Union has been at any point in the last 8 years. And this represents the conscious decision to pull back on the usage of natural gas and try to focus in on more renewable energy sources. Now, the use of gas to produce electricity represents around 31% of all gas used by the European Union. And the two other biggest forms of usage are households. Gas is supplied directly to homes for use in cooking and heating, and that represents around 24% of all usage in the European Union. And gas is also used in a variety of industries for industrial processing, and that represents around 23% of all gas used. This chart compares the demand for natural gas in 2022 and 2023 against the average in the 3 years between 2019 and 2021, which was obviously the period before Russia invaded Ukraine, and therefore there were no issues with regards to having to stop buying Russian gas. And the scale on the left-hand side of this chart is an index that goes from 0.6 at the bottom to 1.15 at the top. So basically this is a percentage comparison. 1 would represent using exactly the same amount in 2022 and 2023 as the European Union did in the previous 3 years. 1.1 would represent a 10% increase in usage, and 0.9 would represent a 10% reduction in usage. And the three coloured lines on this chart represent the three different types of usage for natural gas. The blue line represents gas that's used to produce electricity. The orange line represents gas that's used by households for heating and cooking. And the dark red line represents gas used by industry for industrial purposes. And if we focus in firstly on the scale on the left-hand side and look down to the 1.00 level, which would represent the same level of usage, and have a look along that, you can see that the vast majority of lines on this chart are below that level. And this shows that in 2022 and 2023, the European Union has used less gas than it did in the previous 3 years. And in fact, if you look at the 3 different coloured lines, you can see that the level of natural gas usage by households and industry has been below the historic average in every single month plotted on this chart. And therefore, it's only power generation where we've seen a short-term increase, and that's only actually happened in 3 months out of the last 15. And if you look at the overall situation for the amount of gas being used for the generation of electricity, it's significantly lower. The peaks and troughs on the blue chart are quite pronounced. And if you look at the situation from March 23 onwards, which represents the last 6 months, you can see that all 3 of these sectors have been using significantly less natural gas than they were historically over the last 3 years. So Europe is now using less natural gas. However, it's also increased its usage of liquefied natural gas. And this chart compares the utilisation levels for countries in Europe that have been using liquefied natural gas for at least the last 4 years. The grey bars on this chart represent the average level of utilisation in week 41 in the period between 2019 and 2021, and the blue bars represent the level of utilisation in week 41 in 2023. And as you can see, for the vast majority of countries in Europe, there's been a significant increase in the level of utilisation of their regasification facilities. And a regasification facility is basically a way of converting liquefied natural gas to a gaseous form, because it needs to be converted back into gas before you can actually use it. So what this chart tells us is that not only is Europe using less gas, but they're actually now using a higher percentage of liquefied natural gas. And of course, the reason for that is that the predominant supplier of gas in its natural form was Russia historically. And the way that a lot of countries have replaced those purchases is by buying liquefied natural gas. And this chart shows the sources of liquefied natural gas that the European Union has been buying, dating back to January 2020. And the initial takeaway from this chart is that over the course of the last 18 months, there's been a significant increase in the total amount of LNG that the European Union is importing. In January 2021, which was the low point on this chart and represented the start of the COVID-19 pandemic, the European Union imported around 4 billion cubic metres of liquefied natural gas. However, by April 2023, that figure had increased to more than 13 billion cubic metres. And if we look at the colour coding as to where that liquefied natural gas is coming from, the blue section at the bottom represents North America, so the USA and Canada. And as you can see, the imports from North America have increased significantly and now make up the majority of all LNG that Europe is buying. The orange section above it, which represents Africa, has remained relatively constant, as have the imports from the Middle East. Now, interestingly, the purple section on this chart represents the imports from Russia, and you can see that the level of those imports has actually remained relatively constant throughout the whole of this period. And that does seem a little bit surprising, given the fact that there are significant sanctions in place against Russia. However, the European Union hasn't actually banned the import of liquefied natural gas. And I think this is really an emergency measure, because a lot of the countries in Europe have been trying desperately to move to liquefied natural gas to replace those pipeline gas supplies that were coming from Russia. They needed to make sure that there was enough supply globally to satisfy all of that demand. And so the sanctions haven't actually been applied against LNG. When we get to the point where there is sufficient supply coming from other countries, then that ban may be enforced. But as it sits right now, European countries are still allowed to buy liquefied natural gas from Russia. And in many situations, it represents the best deal in the market. It's the cheapest form, and therefore countries are still buying it. But I think what's interesting is that Russia has struggled to be able to increase its output of LNG. So we haven't actually seen a large increase. Russia hasn't been able to convert the lost sales from its gaseous gas into LNG because it simply doesn't have the facilities to be able to do it. A lot of countries in Europe have gas storage facilities that they use to store large amounts of gas to see them through the crucial winter period. And ensuring that those storage facilities are full at this point in the year is absolutely vital for most countries in Europe. And this chart compares the level of gas storage for the European Union for 2021, 2022 and 2023. 21 is shown by the red line, 22 is shown by the light blue line, and 23 is shown by the dark blue line. And the scale on the left-hand side of this chart is shown in billions of cubic meters of gas. And what you can see from this chart is that the current levels of gas storage are the highest that they've been at any point in the last 3 years. In week 42 of 2021, the European Union had 83 billion cubic meters of gas in storage. In week 42 of 2022, it had 100 billion cubic meters of gas in storage. And currently, the European Union has 108 billion cubic meters of gas stored. And this map shows the current storage levels for all of the countries in the European Union. If we start off by looking at Italy, their storage facilities are 98% full. In Germany, the gas storage facilities are 99% full, as they are in the Netherlands and France. In Spain, they've hit 100%. In Portugal, they're actually at 105%, which seems remarkable, but they've obviously managed to get more gas into the storage facilities than they originally thought was possible. In Austria, the storage levels are 98% full. In Hungary, they're 97% full. In Romania, 102%, so they've obviously got more in than they originally thought they could. Bulgaria is 97%. Croatia is 96% full. The Czech Republic, 99% full. Denmark, 98% full. Poland, 99% full. And Latvia is 96% full. And I think what this shows is that the countries in Europe are ready for the winter of 2023-24. They've got lots of gas in storage at the same time as they're reducing the amount of gas that they're using and also increasing their usage of liquefied natural gas. This chart shows the movement in Russia's daily income received from the sale of its fossil fuels, dating back to January 2022. Now, if you follow the channel, you'll be familiar with this chart. We've looked at it a number of times before. But the reason that I wanted to highlight it again in this video is to show how the income from natural gas and liquefied natural gas has fallen significantly over the last 18 months. And in terms of the colour coding, the figures that we're most interested in here are the gas sales via pipeline, which are shown in orange, and the LNG figures that are shown in beige. So basically the brown section towards the top of this chart. In January 2022, Russia was earning around 250 million euros per day from gas sales and an additional 70 million euros from LNG sales. So in total, Russia was making around 320 million euros per day, which equates to around $350 million. And on an annualized basis over 365 days, that equates to $130 billion worth of income. If we now look at the figures for September 2023, which are on the far right-hand side of this chart, you can see that the section that we're looking at has reduced significantly. And Russia today is receiving around 40 million euros of income for gas sales and 50 million for LNG sales. So that totals around 90 million euros per day, which equates to around $100 million. So on an annualized basis for 365 days, that equates to around $36 billion. So over the last 18 months, the total income that Russia is receiving on an annualized basis for combined gas sales has reduced from $130 billion to $36 billion, which represents an annual reduction in income of $94 billion. And when you take into account the fact that the exchange rate between the US dollar and the ruble has reduced from around $1 to 60 rubles to the current level of $1 to 95 rubles, the purchasing power impact of that is even greater. So what's the summary and conclusion today? Well, I wanted to post this video because natural gas has been one of the biggest earners from Russia's point of view for the last 30 years. They've got the largest reserves out of any country in the world, over 24% of the global supply. So this was a fantastic earner from Russia's point of view. But the invasion of Ukraine has had a devastating impact on natural gas sales for Russia, and they have gone off a cliff. And as we've seen in today's video, unfortunately for Russia, Europe isn't hanging around waiting for these sanctions to be lifted and to buy all of that Russian gas. They've been changing the way that they're doing things. So we saw from the data on electricity production that there has been a conscious effort to reduce electricity produced by both coal and natural gas. And over the course of the last 12 months, natural gas has been the area that's seen the biggest reduction in terms of the amount of electricity produced. And that's been replaced by renewable sources of energy. Europe is focusing heavily on wind, hydro and solar, and this situation represents a change of strategy. There's been a lot of talk over the last 30 years about reducing carbon emissions, and one of the ways that the European Union achieved that was to replace coal power stations with natural gas power stations, which resulted in a reduction of around 50% in terms of carbon emissions. However, there are still carbon emissions coming out from natural gas. So in order to get to a net zero position, the countries of the European Union need to replace the natural gas power stations with renewable energy sources. And that's exactly what we're seeing right now. Russia's decision to invade Ukraine has actually increased the focus on renewable energy, and we are now seeing a tangible increase in the use of renewables. And of course, this represents good news overall for the globe, because lower carbon emissions and less global warming is obviously good for the planet, but it represents really bad news for Russia, because they're sitting on those massive gas reserves. And so what they want is the rest of the world to be desperate to buy that gas. But unfortunately for President Putin and Russia, times are changing, and there is now a different mindset whereby countries aren't thinking about natural gas, they're thinking about other ways of doing things. Now, as we've discussed many times before, Russia also has large amounts of oil, and what it's done with regards to the sanctions is to change its selling patterns. So rather than selling directly to Europe, it's now selling huge volumes to China and India. So the obvious solution from Russia's point of view would be to start selling natural gas to all of the countries in Asia. But unfortunately, from Russia's point of view, it isn't quite as simple as that, because you can't just load natural gas onto ships and sell it. In order to do that, you have to convert it into a liquid form. And to be able to do that, you have to have the facilities. And these facilities cost billions of dollars to construct. And let's not forget that much of Russia's land is in inhospitable areas. The climate becomes very cold during the winter. And so in order to manage facilities in those sorts of environments, you need to have the technology and the expertise to do that. And one of the impacts of Russia's invasion of Ukraine was that most of the big companies decided that they no longer wanted to invest in Russia, and in fact they no longer wanted to operate in Russia. So Russia's lost a lot of that expertise and access to capital. So this is a double whammy from their point of view. They don't have the money to be able to build those new facilities, and there's also a question mark as to whether or not Russia would be capable of building these facilities, and if they have the right technology to be able to manage them. So this represents a real problem for Russia, because speed is of the essence. They need to get that gas out of the ground and sell it as quickly as possible before the world moves on and the demand for natural gas falls. So the overall summary of today's video is that the decision to invade Ukraine has had a devastating impact on Russia's natural gas sales, and unfortunately they're not in a position to convert that natural gas into liquefied natural gas to keep earning money. So as it stands right now, that gas is going to continue sitting under the ground and Russia won't be able to monetize it. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.